Okay, there we go.
And sorry, guys, that was me. I probably
2099, Jim.
yeah. Well, having 723 tabs open is probably too many, and
Um,
my 1 gig Ethernet speed is definitely being throttled for sure. So, I don't
right.
know if Davide. I couldn't even join my own meeting. It wouldn't let me join. So it took me 3 or 4 tries before it let me join. So um, I'll Dion, go ahead and ask follow up on your questions, and I'm going to
Okay.
text Davide real quick.
Other day. Okay, yeah. Yeah, basically, I was just trying to understand like what part, like what's the mix as far as what's user driven right now, and then kind of what is actually pulling from the public record.
Got it. Got it. So macro data, anything that like land value and all of these cap rate ratios, region-based cap rate ratios is more like macro data. But when it comes to project level data, I mean that's something we are still working. We haven't got into the nitty-gritty part of it, but anything that's like financial metrics, for example, we want to have environmental contribution. Just for example, carbon emissions of a specific property, right? And then we need bill of materials, like what are the materials that you've used, energy consumption, and the floor plan. If we have these three things, we can generate all the carbon emissions and including the predictions, and also an application for the property developer to get the LEED certification from the platform itself. So each event sensitivity analysis, there are few things that we get from project. There are few things that we get from the macro, and then combined, we get the output. We can generate output. But yeah, I mean, that's something which we are still trying to figure out. Yeah.
Oh, so you're still figuring, because one of the things I was thinking, like as far as like the macro level data, so you're talking about, things like cap rates and whatnot, and then property value, because I mean, if you're pulling from like some of the public records, those estimates that they have in there are not very accurate. Oftentimes, it's kind of more dated than anything. So I'm just wondering, how exactly you guys are pulling that data, because essentially it's going to affect your value output, right? It's so, I mean, how are you guys planning on like working that out?
Now, for example, to understand better on the cap rate, I'm just maybe my knowledge might be limited here, but understanding the cap rate, if for example we have tracked all the transactions of the property developer on that specific property who has from ground up, if we have all the transactions, and for example the property developer used their own money in sort of getting the land entitled, and then having few vendors, and then few having the construction. So when we track all that, we understand maybe the net operating income. So once we have the idea of net operating income of the property, then we can have better analysis on cap rates, if I'm making sense.
I was gonna, I was actually thinking, and Jim, you could correct me if you disagree with me. I almost feel like, because if we want to predict property values and things, essentially, um, and kind of really estimate, these things, it almost makes sense, like doing it in the secondary, essentially like secondary sales rather than, ground up developments. What do you know what I mean, Jim? Because if you figure the value of the asset is the cash flow, essentially,
Yeah.
right? That it's generating. But a lot of these new developments, oh no, did I lose you guys?
No, I
No,
can.
I'm still here, Dion.
Okay, what just happened? Oh, okay. Oh my goodness. Okay, that was weird. I thought I dropped the call. um, where was I? That screwed me up.
Just
Yeah, because
Sai, just so you know, Dion lives in Beijing, and so sometimes he has an internet connection. That's why he bugs me about mine.
yeah. Yeah, I'm sorry about that, guys. So because I mean, like the way it's almost like the way that you're valuing the investment for like a new construction versus kind of an existing property is still a little bit different. But also I almost feel like the valuation is going to be different, because once a developer, excuse me, finishes developing a property, I mean, it's not necessarily sold at its stabilized value because it's not producing the cash flow. You know what I mean?
That's right. That's right.
Yeah,
Makes sense.
there's two ways to value
Yeah.
property. One is historical, and that's what
Mhm.
CoStar does. and public records. That's all historical. And you can't buy on historicals, though. You have to buy these large assets based upon a pro forma. And that pro forma is going to be different for everyone that underwrites the deal. But there is a way to get what in the industry we call a whisper price, which is if you know an existing project, not a ground up development, but an existing project that we're going to take over and have a value add component. All you have to do to know what it's absolutely worth, like what an appraiser will appraise this for, is to know what the net operating income is. And you use NOI and the cap rate that gives you the existing current value. So all you have to do is know those two pieces of the equation, and you can guesstimate very closely what the value that property will sell for. And I can tell you from our experience, that's the minimum it would ever sell for. With stabilized or somewhat stabilized properties, meaning anything that's 85% occupied or above. If it's a non-stabilized property, it's 50% empty, then you're going to have to tweak the equation because there's not going to be NOI to support the sale of the property because it's half empty. But for stabilized properties, which is the vast majority of properties, you could say, okay, this is the minimum that it's worth. And if we're seeing a 10% or 20% appreciation above market, we can factor those things in and say, here's your range of values for this existing project. I don't know if that helps the point you were trying to make, Dion.
Yeah, that's what I was thinking, because I was almost thinking for things like new developments. I mean, you're going to be looking a lot at kind of like the inputs, like the cost inputs and everything for that. So the cost of materials and everything, and then kind of like the developers, like inputs from the developers, meaning like their required returns for their development and things, to kind of essentially estimate, you know, potential, I guess, all in value or whatnot, like from the developer's perspective, and then potentially, I guess, what a project, if they were to like flip or just sell the project to a syndicator, you know, like us, that is looking at actually operating it and stabilizing the property. It's almost like maybe different levels of value, Jim, you know, that you would have. Yeah,
Well,
essentially.
yeah, and we do have different valuation models, obviously, for different asset classes. So if it's industrial, you know what the average per square foot cost is. Say, for instance, in the far western suburbs out here by me of Chicagoland versus inside city limits versus very close in downtown. You know, very different price per foot for warehousing space, and you. Even a new development, you'll take those models, and if you're a smart developer, you'll try to sign some contracts ahead of time so that you have a stabilized value in mind based upon, you know, what your NOI, projected NOI is going to be based upon some pretty solid input of potential clients. And even if it's not, you can still use that market cap rate for industrial based upon per square foot and potential what the competitors are doing, and still get a pretty good idea of what it should be selling for. But some of these asset classes are out of favor. Industrial is not one of them, but retail, as an example, very out of favor, and cap rates cannot expand fast enough to keep up with how quickly most of them have depreciated. And so hotels is another one. You're seeing our group, our asset class, multifamily, now moving into a lot of hotel conversions because we can buy them cheaper than we can develop them. And, you know, there a lot of what we need, the bones, is already there. And we just need to come in like industrial and commercial office space. You know, everything inside the walls is customizable. And so that, you know, that is changing those values. They had been vastly depreciated. Now they're starting to accelerate again pretty quickly. And I would imagine next year, you're going to see the values there increase 20, 30%. So,
yeah, I really like how, you know, when you were, where you showed us the research that you had worked on, I'm assuming that was in India, right? The research paper that you wrote. So you were looking at Oh,
here.
for here. Well, yeah, but you were looking at the Indian market. Is that what it was?
We were looking at 9 markets and investments
Okay.
from the US.
Okay. Oh, so investment coming from the US to other markets, right?
Other markets, other 9
Okay.
different,
Okay. Yeah, that's what I thought.
Nine
Okay,
other
great.
markets worldwide, or 9 other markets here in the US?
9 outside the US,
Okay.
and one of the market is US also, US to US investments. So
Okay.
even though we
I
are
see.
taking cross border as the schema, we had included the US also. Yeah.
Mhm.
Yeah,
Okay. Yeah.
I misunderstood
I
too.
thought that was pretty neat.
Yeah,
Yeah,
I
yeah, I thought that was pretty neat because you did mention it was well, I thought I saw FDI there somewhere, and kind of you're analyzing the effect on like ADP, I mean, excuse me, GDP and the Human Development Index and whatnot. I thought that was really neat. And it sounds as though that you're trying to apply a similar model to the US. So essentially, you would be able to identify perhaps, let's say, different stages that markets are, submarkets, I guess, in the US, where they are in the real estate cycle, right?
Right, absolutely.
Okay. So you can kind of figure out which markets might be more like prime, or which strategies to use in certain markets. Now, one of the questions I had in mind was, so let's say, if I'm a real estate syndicator, asset manager, on a team, and I'm trying to keep track of everything and have to stay on top of whatnot, would this software that you're developing, would it send maybe notices or indications of some sort? Because I'm assuming clearly the information or the data is dynamic. It's constantly changing, right? So would it send like notifications, like say, hey, look, this is like a predictor type notification. It's predicting like within the next or the coming year, a potential change in the cycle or something. And so that would be something I could use in my decision making for, like my exit or whatnot, my overall strategy. Is that something that you guys are thinking of, or what?
Uh, Absolutely, of course. I mean, there are fluctuations, there are sudden shocks. It's called sort of impulse response functions. So if there are sort of some, like, for example, just COVID, right? Just example, if the first day when COVID shock happened, and it compares with the recession shock, and immediate tripling effects, what it is, it's very similar for whether it's a recession, because it's the panic that creates, right? So with that panic, you can see initially it's going to be very similar, but how it's going to change. So in each of these fluctuations, definitely alerts to investors or maybe property developers, the decision makers, will be given out. I mean, these are the things maybe while we are working on the product closely with customers, we can definitely customize it to based on investors that we are working with or property developers we are working with. But definitely, to answer your question in short, yes, the alerts are a very prime component for what we are trying to do. So everyone using the software understands quickly what's the next step, that investors or developers should take. So yeah.
And let me follow up with this question. So you use COVID as an example. So that, clearly that was a black swan event. No one really expected that. But I think further, what was really unexpected, especially in the real estate industry, and I'm curious to know exactly how your model would handle this, like in real life. Did you have this before COVID?
This was, of course, this didn't include anything of COVID, what we are trying to do. It was,
okay. Yeah. But I'm saying, but it was around like before COVID, right?
Right.
Okay.
Before to, throughout the process.
Okay.
But yeah.
So okay. So maybe just hypothetically speaking, I guess here, how is it that you envision the model? Let's just say, okay, so COVID happened, right? But what was not expected was the moratorium on rents and like the evictions and everything. So how would your model learn from something like that, and like how would it change?
Got it. So that's a tricky question. Maybe have to put more thought into it. But just what comes in back of my mind is we also have these data scrapers, how we have OCRs for contracts. We have data scrapers from different news articles, which is continuously going on. Or even a small comment like stimulus or stimulus predictions, or, the new policies that are going to go. Small business because of small business, the stimulus schemes and all of that. How are the prices changing quickly? So these data scrapers are they are continuously moving along with the contract. So I don't know, maybe project level data from contracts, from the news articles, the real-time information from news articles, relevant news articles, along with COSTA type of macro data that we have, we can definitely make better predictions than not having any of these things in place. So yeah, but everything will be integrated. Every data source that we use for any predictions will be integrated into the model based on what data source is credible. So yeah. Even
So it's
a small comment, even a small, for example, tomorrow someone comes and says government's launching this policy in this specific county, and for example, law 97. Let's take New York's law 97. All of a sudden, carbon emissions should go down by 2024, and by 2030 this should happen. Immediately that picks up. Before even a comment, even before the policy is made up, even a comment on that can give you a confidence interval. What I mean by that is, if suppose this policy is enacted, these are going to be, if not, these are going to be. So it just gives you more information than the decision on what you need to take.
Yeah. So I mean, because all that information is still useful. And especially when it comes to like scenario and sensitivity analysis. I mean, you can make those adjustments in decisions, yourself, as far as based on the information that you're gathering, you can apply that to your model to determine, okay, like this scenario, worst case, best case, etc. But that being said, so what it sounded like is that you're saying that this software is going to be able to pull from, you mentioned credible sources. So let's just say like the Wall Street Journal as an example, as being like a credible source. But let me ask you this, because I'm a big believer, just as an analyst, even myself, I'm a huge believer that you look at a lot of things, just general chatter online, right? And right now, it almost seems as though, and it's probably been this way for a while, but just that chatter in and of itself is enough to move markets. I mean, you look at like stocks like GameStop, and whatnot, and the effect that that's had. How much, or if not at all, do you think that you guys would even consider this as even being a potential type of input, for predicting market movements and things, and with regards to real estate?
Got it. I mean, it's definitely learning for me. Of course, stock markets, even with, as you rightly pointed out, even Elon Musk's comments can actually drive the stock
markets.
Markets and things.
That's
like
what
that.
I was thinking. If you give your software certain inputs and thought leaders on different platforms, so an Elon Musk, a Jerome Powell, and world leaders, and what they're tweeting, on a given day, or a social media post that they made that they think only their friends are paying attention to, not something that they put on CNN, can have a huge influence on where we go. And I think that in regard to black swan events, this was predicted in some circles. And if you were listening to the right people, that's why, the insurance piece is so fascinating to me. We want to be in the insurance business for multiple reasons, but this is one of those, in that Lloyd's of London, on their website, I follow them. I don't look at them often, but once a quarter, and they have that. It was in their prediction model that this was going to happen, and no one paid attention to it. What didn't make sense to me in the whole thing was it was a political decision to shut down the country, because I personally think that this is really not terribly worse than what the bird flu, SARS, MARS, these other big, Ebola breakouts, a lot of these other black swan events that happened that didn't have this kind of impact. And why we decided this time to go down that path, I still don't understand. And trust me, I'm personally grateful, because I self-isolated for about a year, and the moment I went outside, I contracted the Delta variant. So it was just bad timing, just bad luck. But I still don't necessarily agree. I haven't got enough data to make that decision. But I think if you're following the right people, you might pick up on some of that. Maybe you would have picked up on it early if you'd been following key thought leaders in China, the key thought leaders throughout Asia. You know, you might have picked up on some of the political pieces of it that drove that decision. But I think if you're scraping the right data in the right places, I absolutely, you know, it's Minority Report. You know, it's coming. It's there. It's available. And we just have to beat the Googles and the Facebooks of the world to the punch, because trust me, if we're thinking about this, so are they, and they're light years ahead.
That's right. Yeah. And what I was going to say, Jim, so I agree with you. When you're talking about like kind of monitoring like what's going on with a lot of the thought leaders and like the influencers. I mean, who would have thought like a tweet from Elon Musk would send Doge, you know, to the moon, basically, right? But what I was getting at, and what I think is really, really kind of like, and I mean, guys, please, you disagree, just disagree with me. I think even just the little people. So like, it's like the smaller investors that are out there that also are influencing markets, meaning like the guys that are in the local market, maybe not influencing the market, but they see something that maybe other people like the eagles, like that are just kind of flying overhead, they may not actually see that, you know? So like, and everybody's sharing information out there anyway. So they're like, oh yeah, I just bought property here in XYZ market. I like this market because something, something, something. And then you see someone else had posted something similar over there. Someone else posted something similar over there. So that's like, hey, that's a green light. Maybe I should actually look into this market and see what's going on. It wasn't necessarily a thought leader that said that, but you have enough people out there that are all pointing to this one, you know, place where they're buying property or they're doing something there. And it might be an indicator, hey, look, I should probably look into this place and see what's going on, because maybe this is on the cusp of like turning around.
Right.
You know what I mean?
That is extremely granular,
Mhm.
getting down to a micro level.
Yeah.
You would, I think, if you wanted to implement that, you would, me personally, if I were smart enough to do this, I would be thinking, what could I give everyone, including the very little guy in the very little market? What could I give them for free that would convince them to share their data with me?
Right.
So that's what Facebook does. I'm going to give you this platform to talk to all of your friends and family, and it becomes what it is. Google, we're going to give you free Gmail. We're going to give you a free Google Sheets spreadsheet and document and, you know, slide presentation for free in storage for free. But then we're going to start charging you as you get hooked.
Right.
And so you have to have that kind of model. That's the model we're using. You know, we're using that. Let's give away all this information for free in hopes that everyone will come here and want to use this platform. And then we can grow from that. And so I don't know what that looks like, but in your prediction model or in your due diligence model, there has to be some little piece that everyone would say, man, I would love to have that. And it doesn't cost you to give it to them. Maybe it's something like what we're doing, developing that underwriting analysis spreadsheet that we can give away for free that keeps driving them back to us, you know, and
there's huge demand for that too.
Yeah,
Jim.
yeah.
Yeah.
And I think even integrating, like if you really did focus on commercial real estate, everyone has to use an underwriting model. And if we could integrate your due diligence into our underwriting model, and give that to you and say, give that to everybody, then now you can drive potentially that data collection. But it also means that, you know, when you get that far down in the weeds, you know, just the amount of hardware necessary, you know, to collect all of this and the number of people, I think that's a vision. I think that's something you strive for. It's not where you begin. Just like us, we've got a ton of long-term goals, but you know, we have to start where we are in this at this point. So I could talk. Sai, you're on mute, I think.
Oh, can you hear me?
Yeah.
Yeah.
I could talk to you forever. I want to be respectful of your time, and I do have a hard stop at the bottom of the hour anyway. But I just, for me, I only have one question, which is, is this something, do you feel like there's any value here for us to continue to have conversation and to start to get to know each other better? And if there is, let's schedule some type of follow-up. And oh, by the way, I want someone like you to use someone like us as a resource also for that open source programming idea. So we've got a ton of people on our network like you in the profession that are in the IT profession, and they don't really like it that much, I don't think, because they're all here looking to buy real estate. They're looking to either one of two things: secure their future so they don't have to worry about their job and getting fired, or get out of their job and just do this. One of those two. Either way, smart people, because I don't care who you are, you'd be the head of the company. They kicked Steve Jobs out, and it was his company, and they still kicked him out. So there is no job that is safe. So I'm respectful of either of those two people. You hate your job and you want to find a way to replace it, or you love your job, but you want security that they can't give you. And so I would say to you that I haven't been successful yet in corralling those cats, herding those cats to work on our project. But someone like you, with your voice coming from where you're coming from, I think would be much more successful. I equate it to that developer at Microsoft who's working on a project, and his team leader comes by every day and says, here's the 3 things I need by the end of the day. And he looks at it and says, yeah, but I've got this great idea that I think will make this the best project in the world. And he goes, I don't care. That's not your project. Work on this. So what does he do at night? He goes home, jumps on the Linux platform and says, I've got this great idea. And Linux is like, we love it. Go to it. It's all yours. Do what you want to do. And I think someone that can speak the right language with the right tonality, like you speaking to other tech people, might have more success in getting that free labor, if you want to call it that. Creative people, allowing creative people to be creative and work on things and add value to things. And that's what we're building on, because I know they're smarter than me. And even the ones that may not be smarter than me, I haven't found them yet, but there might be one. Even they can have an idea that I didn't have and take us in a direction that we never even expected. I didn't expect to have this phone call with you this soon, but I'm very glad that we did. So, Dion, anything else?
No, I just would like to know what Sai, how does he envision both WinPra and the GOB network kind of like working together? Like, what does that look like in your mind?
Or first off, do you even see that?
Of course, yeah. So there are 2 things. I mean, one thing that I wanted to just get back a step back on the when you said granular information and things like that. So which is very, very important in developing the model that we are trying to do. But the second thing is there's something called more like principal component analysis, PCA, is when you overfit something, because we need information what Elon Musk told about a particular market. For example, like let me relate this to stock market. But we don't need information on what a normal XYZ spoke about real estate, right? Of course, even that XYZ person might have an impact on the land prices and so many things are happening. But is the impact worthy enough to include it in the model? Is it weighted enough, or is it only good to take Elon Musk? So there is underfitting and overfitting in a model. So both of them are very, very harmful. Of course, granular data, when you can show that as an information, but when you're including it in the model, it's always, you find that point where you're saturated. Anything more than that is definitely might give you better information, but might not be worthy enough for you to get that information. So that's literally even in this research when we were testing it. So many a times what we did is we got over data and we wanted to, okay, let's not, by including that, we are straining so much to the model. Even if we are getting right metrics out, we cannot make it a generic one for 2 to 3 property data. Maybe only to that specific property that might be right. But sometimes overfitting might be true. But underfitting is definitely not the question here, because that's the reason we are trying to get the project level data. So every transaction that happens, or maybe if you're in the acquisition stage, it's better if you can give your previous financial history, like last 5 years, last 10 years financial history of your specific project, what all transactions you have done. If you upload that, it's almost equal to signing the contracts on the platform. So that's the thing. And one is that. And the second thing, what you said, what is something that we can give it out for free to sort of to attract people to give their data. So one thing is what we were thinking, if you've seen the prototype, is Dropbox style view. Dropbox, there is people pay for Dropbox, people pay for DocuSign, people pay for storage, clouds, and all of this, and then of course CoStar and all of these things. And so those are the aspects that we might make it for free. Of course, that might be at a very low cost, or maybe for free also, so that everybody starts using this platform and signing the contracts and making all your, for example, I am a property developer and I'm buying from a specific property owner, the landowner. So all the transactions that happen, the options, for example, I bought that land through options or maybe ground lease or all of that, you put a smart contract there. So each and every change into that options or the conditions, if the conditions are met, automatically the fund is released. So this comes into blockchain smart contract. This also can be offered for free at a later stage, right? So because we are getting the data, we are getting so much data, everybody's doing the transactions, and we can charge the investors for looking at that amazing data, project level data we have got. So of course, there are multiple models that can come, but again, coming back to the point, we are still early stage. So that's the thing. Discussing with multiple industry leaders, they've each given us a different point on how we can streamline the whole project finance that happens in a specific project. And we can, every time they need an investor, they can have a conversation on the platform with an investor at that specific point. So, but yeah, so that's the thing. And definitely would love to collaborate. You can throw suggestions on how best we can collaborate, because yeah, I mean, we are still early stage, so open to anything. So please let us know, and then.
Sounds great. So I look forward to following up and having more calls, Sai. If you have more questions for us, we can wait for another call, or you can put them in an email and we can address. But I think that this is a lot of great ideas that we would like to pursue, and I think that we need to sit back and watch the recording a couple times and formulate our own questions, and more importantly, formulate our own value proposition of how we might be able to help you.
Got it. Absolutely, of course. Thank you. Thanks a lot, Jeff.
Yeah.
All right, I'll talk to you guys soon.
Okay, thanks. Thank you.
Right.
See you.
Hey, Sai,
Yes.
real quickly, could you connect with me and the other guys on LinkedIn so that we can get a contact information for you?
Oh, of course. I'll immediately do that. Yep.
Okay, thank you.
Yep.
Okay,
Talk to you soon.
thanks. See you.